Welcome back. My name is MrSchroeter, and I want to thank you for tuning into my channel. Please make sure that you subscribe to the channel. Hit that join button. Join the channel membership. Make sure that you are tuning into all of our uploads, the previous uploads that we've had, as well as our new uploads. Ring that notification bell. And don't forget to subscribe to our other channels, the Nigel Schroeder Show, which is my podcast, as well as the Credit Sensei, which is my other channel, where I'm giving you guys all types of tips on building your business and personal credit. The Cash Couple is another great channel that we have where you're going to get to see some behind the scenes action with myself and Crystal. And don't forget to go back and tune into some of my shorts where I give you guys some of my keys to success and some quick credit tips. Check out our playlist as well as our previous live streams. And with that being said, go ahead and sit back and prepare for the show. All right, welcome back, everyone. And I want to thank you all for tuning into this video. Today, we're going to be talking again about how you can transition your cash into credit. So this is going to be very important for those of you who are currently working and you're trying to build your credit. You have a goal in mind. Maybe you want to buy a house. Maybe you want to buy a car, whatever it is. And you're trying to figure out how you can use the cash that you do have without exhausting all of it or a large amount of it in order to be able to build your credit score so that you can obtain your goals. And I'm here to tell you that after watching this video, you're going to be able to take as little as $200, $250, maybe even $500 and completely turn around your current credit situation. So to begin with, the first thing that you want to do when you're on your journey to turn your cash into credit is you want to figure out what it is that your credit report needs. So if you're someone who doesn't currently have any credit accounts, then more than likely you're not going to need to go crazy by getting a bunch of credit accounts, but you're going to want to get maybe 2 or 3 accounts to have a strong foundation on your credit report that you're going to be building. Now, if you're someone who has already had previous credit accounts and you've used up your credit and you've used it improperly and now you're trying to repair it, I personally recommend to have 2 good accounts to every 1 bad account that you had. Now, I'm going to tell you how you can build this up rather quickly and easily, and that is through what is called secured credit as well as no hard inquiry, no credit check products. So you can take these no hard inquiry, no credit check products that will give you free trade lines and apply for them. So this is Cred AI, Kickoff, Grain, products like this where you're not putting any money down. They're not checking your credit. They're not charging you, but they will report a primary account to your credit report every single month. So in doing this, you're going to be able to take these accounts, put them on your report, and easily get a credit score reporting for as little as nothing and having those positive payments reporting every month for nothing. Now, when you go ahead and you get secured credit cards, which is going to be the next product that I'm going to talk about, you can take these a deposit of as little as $50 with Capital One, but with most banks, they're going to ask you for $200. Some banks will ask for $300 or $500. I always recommend going for the bank that is going to give you what is called graduation. So all you have to do is call them and ask if the card graduates or look through that card and see if it graduates. That means that after you've had the card for a certain period of time, they will send you back your money and unsecure the card, meaning that you're no longer borrowing this money from yourself as you do with a secured credit card where you put up $200 and they give you a $200 limit and you're just borrowing against your own money. But with a unsecured card, the bank is going to give you a set limit. Maybe it's $500 and you're going to be borrowing that money directly from the bank rather than borrowing it from yourself. So by being able to take advantage of a card that graduates, you're going to get your money back without having to close out the card and get rid of all the positive credit history that you're going to be building. So that's why I recommend that particular method. Now, the next method is a secured loan. Now, secured loans are great because you can continue to use the same money over and over again to get multiple secured loans. So what am I saying with this? Basically, a secured loan is you go to the bank, you take money. So say you take $500, you give it to the bank, they're going to loan you that $500 back. Now you can take that same $500 and go back to the same bank or a different bank and open up another secured loan for $500, which is going to allow you to build relationships. Now the caveat with this is most secured loans allow you to pay them back monthly a certain amount, maybe it's $40 or $50, and then at the end of the loan you get all of your money back. Now there are certain banks and credit unions, Navy Federal being one of them, where they will actually pay you your money back as you pay them. So you open up the loan, they give you your money, you pay them the monthly payment, the $41 or $42, and they send it right back to you. So with that method, you're going to be able to do this more frequently and open up more loans because you won't have to worry about missing payments, because as soon as you pay them, they're going to send that money back to you. So you can just have it on auto pay in an account and it'll continue to filter through. As long as those loans all align, you're going to be perfectly fine with doing that. And so if you can get into Navy Federal and you're eligible, I recommend that you go that route. And I have a whole video to talk about that method and explain it more in depth. Now, as far as how do you know what you need? Basically, you have to understand that all secured credit products are going to build credit history. They're going to build a relationship with whatever bank you open them with. They're going to give you positive payments on your credit report. They're going to improve your credit mix. Most secured credit products do not require a hard inquiry for the loans. Some of the secured credit cards will require a hard inquiry, just as well as most of the loans. If you do get a hard inquiry, they will allow you to open up multiple loans off of that one hard inquiry. So always ask the bank that you're applying for, do you pull multiple times if I open up multiple loans? Because that's going to let you know how many of these you can open and how fast you're going to be able to open them. Now, if you specifically do not have a credit card, do not have a line of credit or anything that's going to report to your revolving utilization, then I'd recommend getting a secured credit card over a secured loan. Now, if you just need to add to your credit mix or just need to get something reporting to your credit report, a secured loan is a good option. Now, in addition, and the bonus tip for anyone who's still watching at this point, you can always go and get a secured loan, take the money that you get from the loan, and put that money back into a secured credit card as long as you open up that secured loan first, because they loan you your money back. And then you can take that right to the bank and open up a secured credit card with it. And another bonus tip that I wanted to add for you guys is whenever you're looking at secured credit products, with your secured loans, make sure that they are not from lenders that are going to give you high interest rates. any interest rate over 6% for a secured loan, I would consider high, because remember, you are loaning yourself the money in this scenario. So granted, for credit cards, you can go higher because as long as you pay them within 30 days, you don't pay interest. However, with secured loans, I repeat, I do not recommend that you apply for any secured loan with a interest rate over 6%. So that's going to be that APR section when you're reading over it. If that's over 6%, go to the next bank or credit union. So with all of that being said, I want to say thank you to everyone who's watching. Thank you to everyone who's tuning in, and we will see you guys in the next video.